Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.
What's up, guys? Mr. Fit to Flourish, and today I wanted to talk about what's going to happen in the markets this week, what happened in the past, and how do we navigate the markets upcoming. Okay, so this is what our Discord calls stocks and coffee. So let's get right into it. All right, so this week's in Stocks and Coffee with K5 and Fit to Flourish, we start off with a quote all the time. And the quote is, don't judge each day by the harvest that you reap, but by the seeds that you plant. Okay. And then something I saw this week was institutions and hedge funds can be just as dumb or smart as retail traders. The only difference is access to capital. So really what we want to focus on is creating the habits that allow you to grow on a day-to-day basis. We know that, you don't want to be YOLOing. You don't want to be just over risking on trades. You want to create solid habits because, again, trading is and investing in general is not a get rich quick scheme or get rich quick thing. Okay, it's all about creating habits and watching yourself grow for the rest of your life. Okay, this is a skill that you can develop for the rest of your life. All right. And then so first thing, investing, our great play calls this week. We had massive NVIDIA calls, CELH calls, SPY calls, IWM puts, and SLUN calls. So really good stuff in the market this week from the team. And then again, we are still doing a 3-day free trial. So if you're interested, link in the description below. 3-day free trial for the Discord. If you want to trade with us, trade live. I'll be live quite a bit the next 2 weeks. So definitely an opportunity you do not want to miss. All right. And then upcoming, so Memorial Day is going to be next Monday. Okay, not the Monday coming up, but the next Monday, May 26th. So the markets are going to be closed. Just keep that in mind. And then in our Discord, we do have a July 19th a yacht mastermind and mixer. So that is up and coming. That's going to be pretty fun. All right, and that's going to be in Tampa, Florida. All right, and in terms of earnings this past week, we didn't see too many mega earnings this past week. We're going to see a pretty good upcoming week. But last week in earnings, we saw Cisco, which is a communications and tech company, a solid equity, by the way, with a massive uptrend, a nice beat on revenue and EPS, and it popped 9% after earnings. That's really good. And then Applied Materials, which is one of our semiconductor plays, they had a really good beat on EPS, but they missed just a little bit on revenue. And they said that their outlook for Q3 was in line, which, most investors right now in this day and age of hype, they want to hear, we're going to kill Q3. We destroyed earnings, we destroyed revenue. They just want to see ridiculous things. But the equity tanked 7% the next day. Pretty big tank. But of course, a lot of these stocks are having run-ups into earnings. So the stocks are priced in until earnings. They want to see, should it drive price higher, or should we just go back to where just about a 50% or 61%. So like a golden, like a fib retracement. Should we move back down? So a lot of these stocks get priced in. And then TCEHY, this company is Tencent. So they own Epic Games, Roblox, Riot Games, League of Legends, and one second. So it trades OTC. All right, so it popped 4% after earnings. All right, and then in terms of economic data this past week, so we saw FOMC was rates were held steady just last week, and then this week we saw Powell's speech. Again, he said we're going to take the watch and wait approach, and Trump is calling him too late Powell. This is actually hilarious. But we're seeing a lot of the data more recently coming in showing that we could potentially do a rate cut. Okay, we saw core CPI fall to levels, the lowest rate since 2021. We saw core PPI fall as well, and then jobless claims kind of came in expected, just slightly higher, but mainly in line. Okay, and then related news and buzz. So Capital One finished the acquisition of Discover. So if you own a Capital One or Discover credit card, keep that in mind. This is kind of like when T-Mobile merged with Sprint. Okay, so Capital One is going to be taking over a lot of those processes. Okay, so very interesting. They're big financial institutions merging. So excited to see what comes from that. And then quantum is back on the rise. So think stocks like IonQ, QBTS, SLUN, RGTI. So a lot of these stocks are on the rise, and don't miss out on the move up. All right, Trump and Jensen Huang. So what happened? So they visited the UAE. So there was a $1 trillion deal that was made for the for the UAE to build the largest AI campus outside of the US. And the UAE can now become a player in AI. They always wanted to be a player in AI, but now they can, having access to US chips. This is really good for not only the US and the UAE, but the US is an ally of the UAE, and then the UAE does a lot of business with China. So this kind of makes this three-way entanglement, which is pretty good, if I might say so myself. All right, and then Bitcoin is consolidating above 103,000. It's currently at the $105,000 level as of today's recording, May 18th, 2025. And again, tariff on, tariff off. We're seeing a lot of this stuff, and it's moving the markets. Okay, tariff on, tariff off. Okay, but keep in mind also this week, for the first time in history, Moody's has downgraded the United States credit rating. What does this mean? It doesn't matter what's going on. So Moody's cites concerns over soaring U.S. debt levels, with interest on U.S. debt set to hit 30% of revenue by 2035. All right. So the U.S. Treasury Secretary Bessent asked about when asked about the U.S. credit downgrade, he said, "I don't put too much credence in Moody." Okay. And so what do I think? Okay, what do most people think? Well, is this technical? Is this correction that we saw after the market, is it a technical correction or a psychological correction? It's not technical at all. Okay, there's no correlation with these downgrades and the stock market at all. Okay, so it's more of a psychological. That headline coming out and a lot of retail traders not knowing what these credit ratings even mean. A lot of people sold after the market closed. Okay, but not, it wasn't a huge drop. It wasn't a huge drop. So we're gonna wait and see what happens on Monday, May 19th, and if it's gonna affect the markets at all. I don't think it will, because it means nothing. If anything, Moody is actually late. Okay, is Moody late? Yes, they are, because back in 2010, we saw the S&P as the first one to downgrade the U.S. And then in COVID period, 2021-ish, I think it was, we saw Fitch downgrade the U.S. and now Moody is late. Moody's the last one, but now, I mean, all three credit bureaus have downgraded the U.S. But why now? Okay, why now? And what are these credit bureaus anyway? So Moody's, Fitch, and S&P are the three major credit rating agencies in the world, and these agencies assign credit rankings to credit ratings to bonds issued by companies and governments, indicating the likelihood of repayment of those debts. Okay, so what do we see? So and why is this now? Like, it was really a random rating at a random time. Do they usually have a scheduled rating? No, there's no freaking scheduled rating. So why now? So is this to help big money? In my opinion, I'm like, hey, we know that the market's manipulated. Stocks have been moving up with no retracements. So this could be to help big money cover shorts. Also, to help big money get in at better positions than what they had before on those dips. So so if we do get these moves to the downside, that could be what it is. Okay. But anyways, when you're trading or in the markets, you need to be ready to flip with a moment's notice. All right. If the stock market is bullish and all of a sudden turns bearish, you need to be ready to take puts or to make money on the move to the downside. And if it's on the downside and making a move back up, be ready to catch that move up. Okay. The market can change at any given moment. All right. And then June 18th, that's going to be our next FOMC. All right. There's a 91% expectation for rates to be held steady. And in other news, we see Tesla. So Tesla is going to be a booming and a zooming still. And the reason that it is currently booming is because their robo-taxi ride-hailing service is set to start in June. But they're also planning on package delivery and then possibly food delivery as well. If they do this, it's going to be a huge thing for a huge deal for Tesla. And Tesla could be up at levels that we're currently seeing Netflix trade. This is like Netflix on wheels type of thing. But anyways, Morgan Stanley just called Optimus a $5 trillion opportunity as well. So Optimus, as we know, is the robot that Tesla is setting to put out. And then I like to also look at some year-to-date performances. So this comes from Options Millionaire, the Twitter page, Options Billionaire. So year-to-date performance, S&P is up 1% finally. NASDAQ pretty much back at break-even, Dow back at break-even, but positive. And then we're seeing gold still booming and a zoom in. Small caps were down like 17% just a week ago. Now down only 4%. Bitcoin is back up. when it was looking like it was down bad, extra sad. And then here are some of the earnings for this week. The earnings of note are going to be Pony HD, which is Home Depot, PANW, Palo Alto Networks. That's Nancy Pelosi's big stock. Baidu, Target, Snow, XPEV, and Workday. Okay. And this week, economic data, not much economic data. Thursday, we're going to have initial jobless claims. We do have U.S. manufacturing data, doesn't move the markets. And we have housing starts, again, doesn't move the markets. But initial jobless claims on Thursday, that typically moves the markets. But Monday, Tuesday, Wednesday, we just have Fed speakers, which is not really going to do anything. Right? And then Sunday, Jerome Powell's going to have his commencement address for Princeton grads, but that's nothing major. And then just for the watches for this week, we're talking about SPY, IWM, NVIDIA, Google, Tesla, HIMS, and PLTR. So this upcoming week is going to be pretty interesting, okay? It's not going to be data-driven. It's going to be really driven by trade deals. So what is Trump saying? What deals are being made? And then also the major stocks to be watching, NVIDIA, Tesla, PLTR. What was the other one? NVIDIA, Tesla, PLTR. Also, I think Google's a pretty good pickup here. It looks like it's breaking up above. There's like a 165.60-ish level that it's breaking up above. If it could hold that, then we'll see a pretty nasty rip on Google Schmoogle. All right, and then SPY expected to test that $600 psychological level to the upside. So let's see what we get in the markets this week, starting tomorrow, May 19th. It's your boy, Mr. Fit to Flourish, and I'm outie.